The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to a beautiful new year here at TFNN.com. And as always, I'm your lovable and huggable host, known as the koala bear of Wall Street. Not the wolf of Wall Street, the koala bear. Nice, furry, huggable koala bear of Wall Street at TFNN.com. Anyway, we're going to have a great day out here. We've got a market that's tried to go a little higher today. Very light volume, less than 1.8 billion shares on the day. And I am back from my well-deserved vacation, jet setting around the United States before all the horrible weather has hit us here. Been back for a few days, had to spend a little bit of time yesterday just catching up and going through charts. In fact, I went through a bunch of charts last night. We had a trade on in the Tech Insider that we closed this morning. You may have heard about it in the news over the last day or two. Bought MCP. Oh, it's the wrong one. MPC. MCP. Down here around these lows. Let's take a little closer look about it. Actually want to go one more there. This went back and tested its previous low to the penny with half the volume, and that's pretty much the setup I like. But you could really start seeing that there was a lot of buying coming back in right at that $4.50 level. Had a nice little pop to $4.25, but did come back, test the low on half the volume. I think that was on right around the 13th of December. Anyway, we bought it. I had a buy-in for $4.65 or better. I think I ended up with a fill. I wasn't trying, but got a fill like $4.52. So fairly a decent move. We sold it this morning. I think I sold it at got $6.18 or $6.20. Something like that. Then it pretty much fell right out of bed within minutes of me giving the sell order. I don't think I had anything to do with it. I think I was just sitting there watching it, and it did get ready. But a little bit of a pullback yet today, but certainly did break through when you go back and look, at least at the 425 level. Had a massive volume of 24 million shares compared to the 11 million shares had before, but we did close it out, and depending on where you bought it, you probably got a 35%, as much as 38% bounce out of it. So one of our better trades out here when a lot of things weren't moving extensively in the marketplace. So I like that. I really didn't like a lot of things going in to Christmas. This is one trade that I thought had set up absolutely perfectly. We're going to go through more of the reasons why this stock took off the bottom in the Tech Insider portion of the Tom O'Brien show tonight. So make sure to tune in on that. But a nice trade out here. And I noticed that we have a nice red light on the camera these days. I guess the idea is that we can actually see what's going on. Maybe someone took a piece of tape off of it. But I've never seen the red light that let me know that the camera was on. Always kind of interesting. Anyway, 1.8 billion shares, not a whole lot of movement in the market here, but very interesting. He says that the red light is new. I'm wondering how much of our budget went into the red light, but we'll see. Other stocks of interest, a lot of things moving out here. It looks very toppy. I suspect we could, now you turn the red light off. Does that let us know when we're going between the chart and the actual video camera itself? I guess that's maybe what it's finding. Maybe we'll actually know now. I always had to kind of guess whether or not we were going from the live shot or we were looking at the charts when I was in the studio. So, oh, yes, that is nice. So now I know when and not to pick my nose, and when to pick my friends, and when to show the charts. But anyway, we're looking at this MCP chart. A beautiful test of the lows out here on half the volume. There were a few more things happening out here. I'm actually been wanting to short a couple of stocks. I wanted one kind of a push back up, and I think we're getting those here today. We've got a lot of sectors that are horribly extended, and I think we're very close, maybe a day or two out here from finding them. Gold has had a nice little bounce off the bottom here, trading at 12.36, up $11 again today. Let's take a look at GLD. I've been waiting for this thing to really bottom, and it looks like we've had at least two tests of that lower area. I would have liked to seen the volume really contract a little bit more. So I'm thinking we have at least one more opportunity to buy this at probably 114.50, at least in the GLD. Not a lot of volume today, which is you'd like to see some decent carry through. A doji yesterday, at least in the GLD itself. I'm looking for one more time, and I still, not saying it's going to happen. I think the odds are 50-50 that you still get some kind of blowout low. And I'm willing to maybe miss this to get the big buy just a little lower out here in gold. Of course, if we see the market start to roll over, it will not be uncommon to first see gold sell a little bit. It is a natural hedge in the marketplace, and a great deal of hedge funds and even big street names continue to hedge the markets with gold. They don't care that they lose money on it. They buy more and more gold as the market goes up. As the market goes down, they sell the gold. It is a hedge. It is not meant to make money. It is to be an insurance policy. The idea is that the more and more a market goes up, the more and more that you could walk in one day and find it halved. When you do, of course, gold is probably going to skyrocket. So a natural hedge out here. But that we could not get decent volume last 2 days, at least in the GLD, makes me think that we probably have an opportunity to come back and find this one more time back at the lows. And I would love to see this thing pierce those lows, maybe go down to 112 or something like that, 112.5, maybe even just intraday and then close back up above that mid 114 area on GLD. But I know we've got a lot of gold bulls out here. I've got a question. Can we look at gold, G-O-L-D? We can. And we will. And yeah, I mean, you've got an inside day here on lighter volume. Some of these actual mining stocks are looking a little bit better than the actual gold GLD itself. But you do have an inside day out here. You probably want to look at Monday. One of the things I have noticed is, at least lately, maybe it's just my impression, but it looks like as the weekend comes, you get into Thursday, gold is already start to be bought as a hedge, and then you, of course, come back Monday and you find gold being sold. You know, could we have put in a low on gold? Yeah, I just would love to know that I was buying it when it was all washed out, and I really just haven't had, with rare exceptions, the kind of hatred and vitriol for gold that normally marks a bottom in this technology. Now, Randgold Resources, nice little bounce out here, decent volume yesterday, and of course a lighter volume today. But again, like most of these mining stocks out here, they look a little bit better than the gold itself, probably from an older sold condition. But I would still love to see one more test where we truly broke the lows on Randgold to buy it. I would be a buyer of Randgold if it broke that $60.90 low with something like maybe 750,000 shares, went below it, closed back above it. But at that point, we could still see a huge intraday reversal, which is the way I think this market is going to finally resolve itself. But I'm not short here, nor would I want to be. And like I said, the odds are probably 50-50 we get that. So I could see being long. I could see waiting either one. But just my history as gold has always been to wait while everybody else is crying. Kind of the old Pitt saying in Hogs, buy them while they're crying, and sell them while they're yelling. Maybe they say it the other way. Sell them while they're yelling, buy them while they're crying. And I just haven't seen enough people crying. Maybe it's because Tom got enough people out of gold that they're not suffering, at least the people I know of. But I haven't seen a lot of it on CNBC or Bloomberg crying for the end of the world. We played that one clip last 2 weeks ago where the English dude on CNBC chastised somebody for being long gold. But hard to tell. Anyway, you can always give me a call at 877-927-6648, 877-927-6648. And one of the reasons, if you go back to Randgold, that I'm not a huge buyer just yet is going to be shown in the power law vector indicator. What I really want to see is the energy on one of these legs really start coming out. If you can't really see it, I'm going to hover over it. And that is the first leg down on my power law vector indicator at a 1.8. The next leg down, we had 1.6. And normally what you're going to get is some kind of bounce with energy and then a pull back with lighter energy back to this lows. I'd still like to see that $60.90 low pierced and maybe even blown out, maybe down to $58 or something intraday, and then have it come back up. But that is not uncommon in these kind of gold stocks. And again, even if the market rolls over, we could see selling in gold that would be, for most people, a little bit, what would you say, counterintuitive, and then find gold buyers coming back. We've got Barb from Surprise, Arizona. How you doing today, Barb?
Just fine, thank you. I'd like your opinion on MAN.
Manpower. Well, there's certainly, you wanted to have 1.9 million shares when this thing broke out. Did you ever get it?
Not sure.
And no, you didn't. The big volume was on October 21st, a down day, 1.9 million shares. And this thing has never gotten that 1.9 million shares, I don't think. So, hanging up, my guess is this thing probably going to come back and at least test the $81.71 high. You want it to come back there and test it with lighter volume. But I'd say this thing's kind of hanging up on vapors right at the moment. I got a doji today. You want to hang on through the break?
That's all I need to know. Thank you.
Okay. That would be me. I don't like it breaking those highs without a big sign of strength. We'll be back in just a minute.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we didn't have enough time with Barb, but we were looking at Manpower, and I don't know what price she's in it or if she's in it at all. But long term, I like to use the 25 by 5 displaced moving average to confirm a trend. This only got into it once, and that was back around the 1st of December. This thing's continually moved up. A shorter term trend is the 7 by 5, and Manpower is still above that. The only thing that's really broken is the short term, which is the 3 by 3. This thing could move around between probably 83 and 85. I just don't see a lot in it. Probably support is right around that 82.50, 83. It's done everything a stock should do that is bullish. And if you were long back at the breakouts in the $70 range, I'd say it's as long as it doesn't break that 25 by 5 displaced moving average, this thing's still in an uptrend. I can see a lot of stocks that are a lot worse, and probably take I wonder when earnings is on this. Take a quick look. Earnings date's the 27th. So I would say all things considered, unless this market, which I think could start peaking, this is probably going to continue bouncing around here and probably the last few days rally into that January 27th, all things being equal. So not a bad looking chart, and certainly a nice trend out there for Barb. So let's get back to some of the things that I look at. Energy's good and up, and what can you say? Now, one of the things you need to be really watching for, and I wanted to bring this up, was the very, very decent support levels that you're going to have with Confluence if the market does come back. You want to find these not like this. This is a good-looking chart, and basically, if she was wanting to buy it and had already sold it, we do get a market that's going to pull back. Confluence levels are very good. This thing has an excellent confluence level that sets up a support level right around that, is that $74 level at just pennies. And, we could do a decent pullback in this market. I'm thinking we could come back 20% without any problem, especially in some of the NASDAQ stocks. Even if we only get a mild retracement, you want to be looking at these confluence levels. We've got many stocks that have set these up. I'm going to probably run a scan for them, put them in my newsletter in early next week, finding where these stocks would likely come back as a indicator of which stocks I would like to short. If we do see Monday, Tuesday come along, that's going to be the end of fund buying for this first month of the year. And that we haven't seen a whole lot here so far makes us think that it's going to be tough. Now, what normally does happen is a lot of traders do not come back till Monday or Tuesday. How did I get back to this? I want my portfolio to show. I'm not exactly sure why this thing acts for my password halfway through the show, but it'll be that. I mean, we're flat, less than 1.9 billion shares today. So after a hard day down, 20-point day down in the S&Ps, to not have any upside, not uncommon, but Monday and Tuesday, I'm looking hopefully for the last kind of short squeeze out of a few of these stocks with very high short interest, and maybe getting an opportunity to set the hook on them. But this wouldn't be one of them. Looks very good, and if you're long it, if you do stop out or decide to take your cash, this thing is an excellent buy right back down around that $74 level. So we will watch it. If this thing had already hit $90, I would probably hang on to it, as there's a huge propensity for these stocks that hit $90 just to go ahead and hit 100. Anyway, we're going to look at some others. You too can give me a call at 877-927-6648. I know it's kind of a quiet day out here so far without the indexes moving, and I'm probably going to be a big stock pickers market for the coming year. But we'll look at that in a minute. Anyway, give me a call or maybe post something in the den. I'll try to take a look at it there also. Can it pull back to 65? Boy, it could, but I'm going to say if this thing busts 74, you're probably looking all the way back down to the 50s. So we'll be back in a minute.
2014 has arrived, and Tom O'Brien has put together a special webinar for his subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of the special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
10 minutes. 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 10 min
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, we invite you to give me a call at 877-927-6648, or if you're in the den, you can post a question if you want me to look at a particular stock. I'm going to go through some of the ones I've been looking at. Ann, which is, I think, Ann Taylor. We're seeing a lot of these stocks over the last couple of days bust out and having a little lighter volume than even what we saw in the November time frame. One is this ANN, and of course, you had the November 22nd high at $37.40, 2.4 million shares. So yesterday we kind of break through 1.8. Good volume, but not great. Little doji back out here today. So I'm going to be watching a few of these as the canaries in the coal mine. I'm not particularly interested in shorting this stock, but these are some of the ones that have shown weakness, and I want to see how these things are doing. Now, some of the other ones in this sector that are also showing some weakness are Armstrong World Industries. Of course, they make a carpet for a lot of these, or a lot of houses. And of course, today they had a lot of volume, but could not hold the previous February 13th high of last year. That came in at $58.48, basically 400,000 shares, and we had a great deal of volume out here today. With what is that, 82 820,000 shares. So basically double the volume, and we get these things to roll right back off those tops. So they do a little turtling, a little prairie dogging, sticking their heads out for the test, but not getting the kind of energy you'd like to see. BioCryst Pharmaceuticals, I'm not much on actually trading these, but another one that I was watching closely today, this looks like maybe by the end of the day it's going to have the kind of volume it needs, but it's going to be close. So this thing's kind of basically set up at ABC, probably getting awful close to finishing that ABC. Let's see if we have another one. What is that? 367. I think that, well, it's too much of a retracement for that one, isn't it? So maybe we'll see. Let me do this. Let me turn down. Well, I guess if that would be a 1-to-1 ABC, boy, this thing has a lot to rate. It's done its 50% retracement. It's broken its highs. It might have the volume. A 1-to-1 would take it to $10.93. And I think you'd like to have a lot more energy, like you saw when this thing really took off back in May and June with this rocket of volume. In fact, a great time, even on this, it came right back into this gap area on lighter volume. And that November 8th, was it November 8th? November 5th day came back with 2.2 million shares. Almost an exact 50% retracement of that move, and now move back up. So, not bad. This looks like it may be moving up well in the near future. Some of these other stocks, I don't like that one. Let's take a look at this one. Some of these other stocks that have been rockets out here, looking to see whether they're ready to fail or not. This CYRX Corporation, CYTR is the symbol on it. Wanted to see this thing blow through the December 13th high that had 19 million shares at 679. This is going through it with some decent volume, but about half of that previous. It looks like it's going to close back into that trading zone. So I'd be putting an alarm on this one and keeping an eye on it back in that probably $3.25 range on it. Other stocks of interest. Wanted to see how some of these stocks were breaking down. And certainly in the last couple of days, we've seen some utilities hit hard on a volume, and kind of interesting to see. We wanted to see basically 2.8 million shares, which was the high volume low on September 12th. Even more conservatively, you wanted to see less than 2.3 million shares, which is the October 7th low at 54.62. So what did we have yesterday? Blow through both of those on Consolidated Edison of 3.3 million shares. Again, today, 2.8 million shares. So going to be very interesting. We're going to go to a caller, and that is Nick. How you doing today, Nick?
Oh, not bad. Considering weather and everything, I think we are doing just fine. Happy New Year.
Happy New Year to you, sir, all. Also. Anyway, you're looking at Vivus out here. What are you looking at this thing?
Well, it's one of those stocks, weight loss medication stocks.
Mm-hmm.
And today, as you might have heard news about Herbalife getting under scrutiny.
Yep.
In terms of weight loss, not Herbalife, it's probably the whole group coming under scrutiny.
I think the one that got hit the hardest, though, was Herbalife on that news.
Exactly.
Yeah.
Yeah, and people probably have a reason to be concerned about it.
Right.
But, again, we'll see how it turns out to be. But Vivus is actually, unlike others, making medication for weight loss, and among other things. And it was up today, not too much. It was beaten down quite significantly in the last several weeks.
Yeah. I mean, you got a high volume low out here, and you want that to be tested. It's the November 7th low, and it's $8 with, 8.6 million shares. Pretty good opportunity to go back at that level and get the stock if it comes back there with lighter volume, with good risk reward, because you got $10.29 with decent volume up there. So you could be having a nice trading range in this thing from $8 to $10.30. So it wouldn't be too nice. I probably wouldn't be buying it right here. You've got a little gap where this thing gapped up, but the volume isn't all that much. It's kind of bounced off of that. I think that's only temporary. I'd love the stock if you could get 4 million shares a day back at $8 is where you really want to buy it.
Yeah, I'm not sure if it will come all the way to that. There were always concerns about approval of medication, etc.
Yeah.
As approved.
Yeah. Okay. There's always more fish in the sea. The one thing that I know is that I'd rather miss 20 of these than try to buy them mid pack. And high volume lows get tested 80% of the time. There's a few things that you can go out and look at other than a high volume low that has such an enormous causal effect in the marketplace. And before I do it, I look at 20 of these stocks that had high volume lows and go back and see how they all get tested. And so that's one of my cardinal rules. 80% chance that it gets that you in the next 3 months see that $8 low tested, and those kind of odds are just hard to bet against.
And this is regardless of the news, right?
It doesn't take into the account of the news, but even stocks with good news, if the market pulls back, could you see this thing pulling back $1? And I could. Let's say that the market pulls back, the S&P pulls back 100 points. Would it be a big deal if this thing came back to $8? I don't think so.
No, yeah, that probably would be rather.
So to me, the bigger issue here is that you get that $8 tested regardless of what the market does. And especially in a stock like this that is as volatile as some of these nutritional kind of stocks can be, along with anything that has to do with the FDA.
It's always, tricky and always sensitive and volatile.
Yeah.
Anything in farming, biotech. Do you have time for one of the gold stocks? I might have finished the beginning of your show.
Uh-huh.
That would still be our Royal Gold.
RGLD. Yeah, we already covered this. I don't think that there's a whole lot out here that makes me think that I wouldn't love to see at least this last low come back into effect, and I'd really like it if we could see this thing get blown through to that $38.63 low.
Okay.
And again, here's my working theory on that. That is, if the market rolls over, it is not uncommon for those people that have hedges to sell gold down as the market goes down. And I've seen it a number of times. And that is that you get these big street names with lots of gold, and as the market goes down, they sell gold. As it goes up, they buy gold. And it doesn't matter where, because it's a hedge for them. It's not that they're trying to make money. They are buying insurance. And as the market goes down, they need less insurance, and they'll sell it. So a lot of times you'll see the market go down, and you'll think, hey, gold should instantly go up. And the answer is no. You've got to get past through a lot of the quick sellers from Wall Street that are selling it as and recouping money on the hedge of it in case something really horrible happens. Normally, you get 3, 4, 5 days of a bad market. You see gold sold with the market, and then it bottoms out, and then you start seeing people actually buying gold as protection from the retail side of the market, and normally it's enough to swamp the sellers from Wall Street. And so just notice that you'll see gold sell off a lot of times quickly with a market that fails. And, I'm looking for a 20% retracement in the market, and I don't think that could be any big thing. It could take us 3 months to get through. I'm not calling for a crash, just a huge retracement from a market that's gone up well, let me put it that way.
Right.
So
I would say extremely well, and maybe some people say it's quite some time for overdue for retracement, but sometimes it beats all the logic and rationale. And well,
yeah, to me, I'm more interested in looking at stocks that are giving me real clear signals. When we get off the phone with you, I'm going to look at FCX. I don't think how it can be any clearer than some of these stocks right now. So I would wait on your stock till we find that $8 level.
And I really wanted to thank you for emails which you are replying so promptly.
Okay.
Wish you another prosperous year ahead.
You also. So when we go on to some other stocks, there's some stocks out here making some real nice signals. I don't know if other people on TFNN have covered it, but when I look at FCX out here, this is giving a pretty good indication over the last couple of days that this thing is not finding a lot of volume for higher levels. We're actually looking at that October 30th high out here at $38 at 19 million shares. We've gone sideways for about 3 days, and the best you could get was half that volume. Yesterday, you get kind of a doji yesterday, a little bit pullback yesterday. I'd like to see this thing get back into the $38 range, maybe Monday or Tuesday, and just see something like 4.5 million shares. I would probably pull the trigger on something like that. So to me, there's some low-hanging fruit, but it certainly doesn't have to do with a great deal with stocks that have bottomed. Most of these things I'm looking at are ones that look like they've come back. Somebody asked yesterday in the den about why some solar stocks were doing well yesterday, and to me, it looked like we were seeing some short squeezes in some of these stocks. Certainly, when we looked at some of these, they were coming back to test their previous high. When we look at something like Solar City, SCTY, we're looking at the November highs out here. The 14th of November, 5964, 7.7 million shares. What do we have yesterday? 4.2 million shares. We're into that today, and certainly got a nice little spinning top out here at 2.7 million shares. So, there's a lot of stocks out here that could have some fairly decent retracements, and they're coming back up, that have come back a great deal, but this leg just doesn't have the kind of energy that some of the other ones have. Some of the stocks that have failed that I'd be looking for are SodaStream. SodaStream's gone up to a high of 77.89 and 77.80. Not a stock that I like to be short here, and there is a reason. That is that these guys buy a big ad every year in the Super Bowl. So you can a lot of times see this thing move like a heart monitor when that giant ad comes back in. I haven't checked to see whether or not they have yet, but that'd be the one thing I'd be looking at in Soda. They tend to run giant ads at Super Bowl time, and you want to be watching it at that time. So to me, if you're looking for a play out here maybe this month, you want to be looking at this thing maybe if it gets back down to $45 and check out to see whether they're going to run yet another giant ad during the Super Bowl. You can a lot of times get a little pop out of this stock, even if it's just a few days, some decent coin. We'll be back to finish up the show in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, we're going to look at a couple more stocks out here that are giving interesting signals. Certainly Stillwater Mining Company, SWC, pushing at least the last high out here that had August 26th at $17. Is that 17 or 12? $12.68, 1.3 million shares. So yesterday we did break through that with 1.8 million shares. So if I'm not mistaken, this is a pretty big silver stock company. One of these stocks that has made some fairly decent things. No follow through today, but I'd give it a couple more days to take a look. But this thing would break out, continue. I have a nice little volume. I'll pull back to this 1267 level on light volume. May be the next move for this. And keep an eye on that. Another one that has caught my eye is Sohu. We've talked a great deal about Yahoo being nothing more than a proxy for Alibaba in China. It's kind of amazing with the way that all the Chinese internet companies have been running up to this IPO for Alibaba, probably going to happen in the next 30, 60 days, that we find a Chinese internet company that has been doing fairly horrible. This one came down on monstrous volume on the 28th of October with almost 7 million shares. This thing has just come up with this no volume, 370, 380,000 shares, back to test this gap level, and you still have a nice little high volume low out here with about 2 million shares from November 7th to be tested. So not too bad. $75 down to $60. That'd be a nice trade of $15. So you probably want to be keeping some of these on your radar if we start seeing these markets move and get weaker. And again, I think we probably are within a day or two of this market probably having some kind of tradable high. What you would like to see as the last symbol or sign that we've put in a top for a while is see a lot of these stocks with super high short interest rates, short interest spike up and then close back lower. Normally, we're probably going to see that Monday or Tuesday. That would be the nail in the coffin up here at this market. So we can see it. Of course, going to have a nice weekend. Everybody's going to be watching football, I suspect. Going to be enjoying that global warming if you're up there in Wisconsin. This is supposed to be -10, -20, something like that. Glad I'm down here. It's still cold. It's like 47 today. It's the first day that I can remember being cold. A couple of days around Thanksgiving that were cool. But yeah, this 47 degrees. I remember the first day I got down here in Florida. Maybe it wasn't the first day, first month. I came down on Thanksgiving, moved down on a Thanksgiving weekend. And within 2 or 3 weeks, it had gotten cold, right around Christmas time. And when I mean cold, 45 or 50, I was in shorts. I thought it was a heat wave. I hadn't been down here long enough. But interestingly enough, saw a lot of people walking up and down the beach. And this is in the mid-40s, lower 50s, that had those winter coats from Alaska. The one with all the fur around the face that you only see at the Arctic. And to me, that was probably one of the funniest things in the world. But you get used to what you're used to. Anyway, we're going to be on the Tom O'Brien Show, I think, in the first hour tonight talking technology. And between now and then, just to remind you, sell when you can, not when you have to. Always good advice. See you in an hour. Or Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.